Hello and welcome to this latest edition of Damian's Midweek Markets, the show where I talk about what's been moving markets and what to look out for in the coming week. Now, we've got to a situation where we've got the collision of politics and the stock market. Now, we've had the trade war starting to rumble with Donald Trump in the last couple of weeks, and that is still the case. In fact, we even now have an anthem for the trade war in China. If you go on social media, you can no doubt find that. So the trade war is still rumbling, and we've now got to the case where Donald Trump has escalated it ever so slightly more by placing restrictions on Chinese tech company Huawei on what they can do in the US. What that means is that for the technology space, people are worried now there'll be retaliatory measures by the Chinese. So if you look at the stock market this week, you will have seen that the big tech firms and those relying on chip makers, so people like Apple, their share prices have pulled back. And of course, if you look back at the rally of 2018 and of this rally in 2019, some of the big leaders have actually been the tech firms. So now we're seeing the tech firms pull back and actually bear the brunt of this week's selling. That could be a bad sign for the wider market, but that doesn't mean we're about to completely collapse, because as I produce this video and show, we're still above or around that 50-day moving average on the S&P 500. The bottom hasn't fallen out of the market yet. The retest of 2,800 has held. I think we're going to start to get worried if we break below that and we get below the 200-day moving average, which is down towards 2790 area. If we get down there, then I think people will start to look a bit worried. So last week I said that we should be looking at what other things will happen in the trade war, how China will retaliate, whether they will now retaliate against the Huawei restrictions. Will they devalue their currency? Now, on currency, it's been quite interesting because the US dollar is back above that 98 level. So if you go and Google it, you can have a look at it, keep an eye on it. And the reason the 98 level is important, it seems to suggest that above there, we can see continued strength on the dollar. So it becomes stronger against other currencies, like a basket of currencies globally. Below that, then we're probably going to have some more weakness. The reason that matters is because in the long run, a stronger dollar would be a headwind for the US stock market. So although it's held up relatively well, it could place more downward pressure on the market. Now, continuing with the currency theme, if you come over this side of the pond, the pound has continued to fall. In fact, we got down to $1.27. So that weakness, you're going to start to notice that. You're going to notice it on your overseas holdings. You'll get a nice currency kick from those, but you'll notice it on your holiday money as well. So the pound has continued to fall, and we're actually starting to push below key levels of support that we could completely unravel if we're not careful. It very much depends on Brexit. Now, in the last couple of days, we've had more headlines surrounding a potential no-deal Brexit. We had the cross-party talks between Labour and the Conservatives break down. So no deal is firmly back on the table. And of course, Nigel Farage is back in the limelight. One of the key things going forward in the next week are the EU elections. Now, you may not particularly care because you may think we might be leaving the EU, so why would you vote? The thing is, from an investment perspective, they will probably have an impact, because if Nigel Farage and his sort of Brexit cronies do, in fact, gain a large majority in that election, then that obviously has implications for the European Union itself. There's a definite anti-EU message that's put out there. And if that's replicated across Europe, then that will start to have a negative impact. Again, there'll be the uncertainty about the whole European Union as a whole. If that's the case, then I wouldn't be surprised if we see some wobbles in the stock market, and particularly a sort of spike in volatility. So once again, politics are invading stock markets and influencing them. On that same theme of elections, we had elections in Australia. It's a big world out there. There's a world beyond the European Union and America. So if we go across to Australia, they had a surprise election result where the existing Prime Minister won again. That was a slight boost for their stock market. In India, there's a very interesting election going on, and the exit polls suggest that Modi's NDA party will win. He may not always been popular at everything he's done, but generally speaking, he's a very pro-business mandate and has laid the groundwork for improving the economy. So him getting in is a very pro-business message, and of course the stock market liked that. In fact, the stock market bounced over 3.5% in a single day, which is the best one-day result for the Indian stock market in nearly 6 years. I personally have some slight exposure to the Indian stock market. If you follow my 50k portfolio on 80/20 Investor, you will have seen that. So that's been a positive there. But more importantly, the Nifty 50, which is a benchmark for the Indian stock market, does have some sway on the US stock market. In fact, it tends to be one step ahead of the US stock market. It's not to say there's a direct positive correlation, but when we see the Nifty 50 sell off, or we see it bottom out, so the market actually starts to recover, or it starts to fall, it tends to do that slightly ahead of the US stock market. So it's just an indicator, something to be aware of. So we're at a point with the US stock market that's kind of stuck in a 100-point range at the moment between 2,800 and 2,900. This leap up from the Nifty 50, the Indian stock market, could be quite interesting from a US stock market perspective, just to see if anything follows through over there. So that is it on midweek markets this week. There won't be a show next week, but we will be back in 2 weeks' time. As usual, if you've got any questions, send them to damien@moneytothemasses.com, and you can get hold of me on Twitter, money2themasses with the number 2, and don't forget to leave a review of the podcast and videos on YouTube. Until next time.